Koreanska aktier och berg- och dalbana sedan krigsutbrottet i Iran. Samtidigt riktar allt fler investerare blickarna mot Asien och tillväxtmarknader i allmänhet. Därför är det roligt att säga warm welcome to Christina Woon joining us from Singapore and Eastspring Investments. Wonderful to have you here in Stockholm.
Thank you for having me.
Your timing is impeccable. This has been one of the most dramatic weeks, I believe, especially for Korean stocks. They've been down dramatically and then back up. Are we still at a bit of a lower point than where we started the week as of right now?
Yes, you're absolutely right. I think if you look at how Korean equities had reacted after they opened up on Tuesday after the long weekend, we did see in Asia some of the biggest moves as well. I think that is also a function of the positioning that we had leading up into this risk-off event. If you look at how Korean equities have performed over the past year or so, they were one of the, I would say, the top performing markets of 2025. So I think in the context of that strong run, a bit of profit taking and I guess reversal in positioning was to be expected.
When you look at the Korean stock market index, you find quite a lot of concentration. Samsung, SK Hynix are some of the names that weigh a lot. Is this a big factor for you as an investor?
Yeah, I think that's absolutely right, because when we think about the big tech names within the Korean market, these two are dominant in the memory space. And if you think about tech as well, these companies are beneficiaries of the increasing memory prices that we've been seeing since last year, actually. So if you think about AI thematics, it's quite understandable that these companies would constitute or have grown to such a big proportion of the benchmark. For us as investors, it's that would be a thematic that we would want to access as well. But outside of the tech names, I do think that Korea as a market does provide quite a number of opportunities for other ways to generate income or alpha. So, for example, one of the biggest narratives that came out of Korea last year was the Value Up program, which is basically improving the value of companies, i.e. Either through improvements in corporate governance or shareholder return policies. Now that thematic is across sector, basically, so it's not just within the tech names. And if you were looking for companies within Korea that could be beneficiaries of this, this is also where outside of tech, you could generate some alpha too.
So more than just tech, still, do you find opportunity in Korean equities even after this fantastic year of overperformance that we have behind us leading into this turbulence?
Yes, absolutely. I would say that if you look at some of the changes in regulation that we've just sort of discussed, they're coming through now, actually. So, and many of these that are encouraging companies to improve their corporate governance and shareholder return policies, we should start seeing in the current AGM season, which starts now and leads into April. So you could argue from that journey standpoint, there could be more runway to go within Korean equities as well. So it is actually quite an interesting point, even after the run that we had last year. I mean, this, you could argue this is quite a change in the way that companies are running their businesses or treating shareholders. So that, from an investor standpoint, could possibly justify the re-rating that it's had.
It sounds a little bit like we talked about Japan a couple of years ago about a modernization when it comes to corporate governance, cross-ownerships and shareholder friendliness. Is this a similar movement?
Yes, I think that's a great parallel to draw, because you've seen what's happened within Japan and the kind of movements that they've had over there, and Korea is also doing similar. So if you extrapolate a little and you see that the companies will be taking similar reforms to their business models or corporate governance structures, then that should also, in theory, be reflected in value as well. So back to the name that they've labeled this whole narrative, Value Up, that is really what underscores this.
Quite interesting. If we broaden the scope, I mean, you manage assets all over Asia. Could we talk a little bit about China and Chinese markets? It used to be considered very cheap, but has moved up a little bit. Where are we standing now?
Yeah, if you looked at how China has been last year, it has been one of the better performing markets as well. But in the context of the rest of Asia, It is still relatively cheaper compared to many other markets. If you look at how it has performed versus history as well, last year many Asian markets hit their all-time highs. China actually hadn't done that. So again, you could argue for more runway to go. The other bit when it comes to China, again, from a top-down perspective, is positioning-wise across most funds globally. China still continues to be one of the bigger structural underweights. If you see movements in terms of closing of the underweight, be it from perhaps the more expensive developed markets into emerging markets, China could be a beneficiary of that as well. And then if you look at China as an investable universe too, it's such a diverse market. You know, when we look at it from outside, most people tend to connected to geopolitical issues, which is absolutely right because that's what you see in headlines. But China has such a deep and domestic market as well. You are able to find opportunities within, for example, industrials or even the domestic technology supply chain that they're trying to build up. And these opportunities that are more domestically driven are a bit more insulated from the geopolitical tensions or headlines that you see. And that could actually be quite an uncovered opportunity to look at too.
Quite interesting. You're based in Singapore yourself.
Yes.
That's is that also a market where you see potential as an investor?
Yes. Well, it's my home market, and I'm pretty partial to that market at this particular time, for several reasons. You know, when you look at the volatility that the whole world is going through, what Singapore or the listed space in Singapore, there are many financials, telcos within there. So the more stable business models, these tend to also provide a bit of yield that helps to be a bit of buffer from a return perspective as well. And there's been an ongoing equity development program within Singapore that has been supportive of capital market reform also. So from that perspective, there have been quite a number of angles within Singapore that could provide some downside protection amid these volatile times. So from an Asia allocation perspective, I do see that as an area of defensiveness that could be quite good when times are volatile.
Any other market in Southeast Asia that you would like to highlight for Swedish viewers that might not be so well oriented?
Sure. I think Indonesia can be quite an interesting market as well. The only caveat that I would have with Indonesia is that while there are some good companies within there, you have to be very selective just because, that from a top-down perspective, there are quite a number of macroeconomic headlines that does introduce a lot of volatility to the market. So one of the recent developments in the past month for Indonesia has been MSCI coming out to talk about how they might downgrade Indonesia's status from emerging markets to frontier status. So that caused a bit of volatility within the market. But that aside, if you are able to use these moments of volatility to find or to enter into these more well-run companies, for example, some of the banks or the telcos there, then that could be quite a nice tactical entry point as well.
The status of certain Asian countries is always a bit of a mystery to me. I believe South Korea is considered an emerging market as of now, but it's quite a developed nation. It's a bit confusing, but an important factor, I guess, as an investor.
Yes, definitely. I think that's the beauty of actually Asia, because you have so many different markets within Asia that are varying stages of development as well. You know, you can go as developing as you wanted, or even to the more mature ones like or developed markets like Australia. And throughout all of this, if you're an Asian investor looking at how you would allocate your portfolio, it just means that regardless of what's going on globally, you are able to find pockets of defensiveness, pockets of growth if you wanted to, and you can put all of that together to construct a fairly well-diversified portfolio that has a very balanced set of drivers.
Quite interesting. This is a week of geopolitical turbulence, so it could be suiting to round up with Taiwan. Taiwan is quite an interesting market when it comes to tech. We talk a lot about TSMC, of course, but I'm sure there's other opportunities as well.
Yes, and I think that's exactly right. Because when we talk about Taiwan tech, most people tend to just focus on TSMC. And again, rightly so, because they're quite unparalleled in what they do. But when you look at the tech supply chain in Taiwan, it's also very deep. So you are able to find opportunities at varying levels of the value chain when it comes to whether it's feeding into smartphones or feeding into the tech supply chain in China or the tech supply chain in the US. These are uncovered gems that I would say the market tends to focus a bit less on. The other interesting thing I would say about the Taiwan tech market is on the shareholder return front, because if you look at many of these Taiwan tech companies, you actually find some of them with quite generous dividend payout policies. So again, it's really unusual, because if you looked at tech companies elsewhere in the world, in other developed markets like the US, this combination of being able to have some sort of nearer term shareholder return alongside capital appreciation wouldn't be there. Most dividend yields would be zero outside of that. But in Taiwan, you actually get a good balance of these two. So if you're an investor that wants to manage volatility in current times, still wants exposure to this growing thematic in tech, but wants some stability in returns, Taiwan tech actually is a great vehicle for that.
That's wonderful. A world of opportunity, or a part of the world with great opportunities for the portfolio. Christina, wonderful. Thank you so much for joining us.
Thank you so much for having me.